This podcast is produced by Backroads of Illinois. The risk of trading for the futures and options can be substantial. Welcome to the Markets Club podcast on Backroads of Illinois. We're glad you're here on show. I will be talking with danmion Turner from Houston area. He's a livestock judge for 4-H in Houston. We were talking about the commodities markets with Carley Garner in Las Vegas, Nevada. That's right. Carley is the Las Vegas Strip. We were talking about the economy and politics, inflation with her. You can listen to this episode of the Markets Club podcast when you can listen your podcast. We were back with our guest with danmion Turner from Houston. Stay tuned on the Markets Club podcast. Welcome back to the Markets Club podcast with danmion Turner from Houston area. I'm sorry for your name. Can I just call you Danny? Welcome to the show. How are you? I am glad to join with you.
Happy to be here, buddy. Thanks for having me.
Let's start with our conversation about your career in livestock in Houston area. Could you tell our listeners about your experience?
All right. Well, I grew up in a small town about 2 hours away from Houston called Rockdale. We had about a little over 100 acres, and we had about 100 mama cows. We did so. I was pretty much I was pretty much born in the industry. My dad raised cattle. My grandpa raised cattle, and so we've been doing it since the early '70s. I grew up showing cattle. And so with that, I kind of went to college and got my ag education degree and my master's degree in animal science. And I'm currently working on my PhD, hopefully soon at Prairie A&M University.
Cool, man. Downey, did you decide to be an agriculture and livestock judge for 4-H in Texas, or just grew up in the agricultural industry? Could you explain to our audience?
Okay. Actually, yeah, I grew up in ag, in agriculture. We had a farm growing up. I decided to start judging livestock when actually I was about 10 years old. I joined the livestock judging team, and been there since then. Has been going, ever since. Been pretty steady. Um, we did pretty good with the contest growing up in 4-H, and so I like judging cattle and judging livestock, and so it just kind of moved on from there. I've been judging all over the country. I've judged in at least 10 states over the United States, and hopefully I can make it a every state in the United States before I end my career.
How was in Houston Livestock Show on February? Did you have a grand champion from the Black Angus side?
Okay. We actually was pretty good year this year. I didn't have any Black Angus this year. I had a couple Charleys. I had some Cimbras that did really well. I had a reserve champion Cimbra, and I had a reserve champion Chianina, which we call an AOB down here. And so I didn't have any Angus this year, but we did do pretty good with our Cimbras and our Chianinas and our Charleys.
What is the weather conditions in South Texas for grazing and feeder cattle?
The weather here is hot, buddy. We've been having a few storms here the last few days that have knocked power out pretty much all over the state. But as far as the weather, it's hot, hot, hot. The last few days it's been over 90 degrees and steady for the last 3 or 4 days. As far as grazing, man, it's pretty good. Hay is really expensive right now. But if you have some land, you should be okay. But right now, a round bale of hay is going for 150 to almost $200 a bale. When previously it was for like 60 or 80. But as far as like grazing, I mean, if you're in the right spot, you're good. In the wrong spot, you got to pay for that hay, buddy.
I'm sorry to hear that about the heat.
It's part of it, buddy. That's Texas, man.
Finally, do you have any final thoughts on this year in the livestock sector?
Not really, man. Just hope people and pray people be patient. I got a feeling everything's gonna turn around for everybody. It's been a rough year. I think we're recovering from the drought for like last 4 or 5 years, and I think it's gonna come back and everything's gonna even out and steady out for us. But besides that, man, no, I think everything should be good. Just be patient and pray about it, and I think it'll work out for everybody.
Thanks, Danny.
All right, buddy. Thank you very much for having me, man. You take care. Can't wait to hear it when it comes out.
This is danmion Turner from Houston area. We were coming back with our guest with Carley Garner in Las Vegas. I'm joining with Carley Garner in Las Vegas from DeCarley Trading in the Strip. Welcome to the show. How are you
Thank,
in the Strip?
thank you. It's a pleasure to be here. Well, I'm doing very well. I mean, it's starting getting hot in Las Vegas. It is a desert here. I would like to say that Las Vegas gets a bad rap. Like people think we're just casinos, and we're not. Vegas is actually a very beautiful city. Um, it's nice to have the strip. That kind of stuff is fun, but the real great parts about Las Vegas are actually outside of the city. We have hiking, mountain biking, uh, skiing. So it's a good time here, but it does get hot during the summer. So as long as you can survive the summer, life is great the other 10 months out of the year.
Cool. Let's start with our conversation about the Planting Prospective Report in the Midwest alongside in Central U.S. Could you tell our audience about your sources?
Sure. So I focus more on market composition and technical analysis, seasonal analysis, where traders are positioned, as opposed to necessarily digging into the nitty gritty of the data. And the reason that I do that is I think a lot of the data is already priced into the market before we even know about it. And so, what my personal opinion on what just happened here with the planting report is, we came into the we came into the planting season with the market kind of on the wrong foot. Speculators were very, very net short, according to the CFT's DOT report. We knew that speculators and funds were very short the market. Unfortunately, a lot of farmers were starting to panic in the cash market and sell off some of their grain at low prices because they needed the capital to operate for the next growing season. And so the market was just kind of people that were selling in the low fours were doing so because they had to, not because they wanted to. And it just put everyone on the wrong foot. So of course, you fast forward a little further, and we start getting rain and couple complications that came with the planting season. And I think the market just kind of took it and ran with it, because everyone was positioned for the market prices to go the other way, and so they kind of exaggerated the planting obstacles. Let's put it that way. And I think that's what we saw. That said, now that it's known, I think the planning is actually going a lot better than expected. And so, unless right now the market hasn't pulled back all of the premium that was built into. So, for example, if you look at corn prices are still a lot higher than they were before we started getting concerned over the planting season. Probably because it's for some reason the market's expecting drought or some other weather issue. Because let's face it, commodities have had a lot of issues with weather over the last couple of years, and not just in the grains, but in many others. And so the market still has some of that premium built in. But I do worry that if we get further down the line and there aren't any weather issues, that we pull the rest of that premium back in plus a little more.
Like in Wall Street in New York, right? Yes, we got some rain in central Illinois. Some farmers are not planting.
Yeah. I do talk to a lot of farmers. I mean, I don't talk to all of them, and it's very, hit or miss. It depends on exactly what part of the country you're in, and even people that are in the same county. One guy is doing just fine, and then the other guy hasn't even gotten to get out in the field yet. So it's really there's pockets of trouble, but I think that's the case every year. And in this business, I think we always talk about the negatives more than the positives, so we tend to embellish those things a little bit more, but only time will tell. The only thing that all we can do is wait and see. But from what I'm seeing, I think things are progressing pretty well.
Right, right. How is the oil markets in today's close about the world events in Middle East for right now?
The oil market has been very interesting. In some ways, the oil market was kind of a victim of its own success. A handful of weeks ago, we had a really big rally on the heels of Middle East violence. And so that wasn't necessarily surprising. A lot of times when we get violence in the Middle East, oil goes up because people believe there's going to be some sort of supply disruption. And more often than not, there's not. And unfortunately, what happens is everybody jumps on the bandwagon, buys oil, at least on the speculative side of things. And then when we find out it really wasn't that big of a deal, oil comes back down and it usually washes out to a price that was even lower than where we started. And that's exactly what we've seen. So it's a little, if you're a bullish oil, it's a little disheartening to see that, but that's actually very, very normal. And now that we've got that out of our system, we're probably in a situation where the fundamental angst, like the thought of maybe something going wrong in the Middle East, or even, let's face it, Russia and Ukraine is still an ongoing problem. And Russia is a big oil producer, so that's a wild card there as well. Those things I think will at least prevent the market from washing out and going much lower. Whether or not we get some catalyst to rally, that's yet to be seen. But I think even without any catalyst, I think we're looking at a situation where OPEC is supporting prices. They've worked very, very hard to keep prices in an uptrend, OPEC. And so I don't think they're going to give up very easily on that. And I think as time goes on, this is a very seasonally bullish time of year for oil. And we still have all of these things flaring up around the world. I think we get a kind of a grind higher. I'm not convinced we won't see something close to $100. Maybe we don't see $100, but we could easily see the mid 90s, maybe even low 90s. So I'm bullish oil. I think the path of least resistance is higher.
It's been up since October. However, we are seeing the prices for the last weekend for a Memorial Day weekend.
Mm. Right. October was a rough time for most financial assets, stocks, bonds, crude oil, everything was kind of bottoming out right at the same time. And so most of those assets are quite a bit higher than the October lows, but we have given some back in both treasuries and crude oil. Again, I think this is going to be temporary. There's really, really good support in the mid 70s in oil. So even if we do take a step or two back, I think that enough buyers are going to come in on the dips to keep the trend moving higher overall.
How about the spending bill in Washington? What happened with the spending with our government?
Well, I mean, it's no surprise if you look at an M2 chart, which is like the money supply in the US, or if you look at any of the M charts, we've had a really, really big explosion of capital put into the system. And a lot of it was COVID. A lot of it was probably justified, but they probably went a little overboard. That's my opinion. And what happens is you get too few dollars chasing too many dollars chasing too few goods and assets. And you get these really big, wild volatility swings in assets that don't deserve to be treated like that. For example, GameStop or AMC stock, if you're following stocks. And we even got it in the commodities. We saw it a little bit in cocoa. We saw it in commodities like crude oil a couple years ago, natural gas, and even the grains. To be honest, I'm a fan of farmers, and I like to be farmer positive, but the reality is we probably didn't have any business seeing $7.50, $8 corn. A lot of that was sideline money or money looking to hedge inflation, and it was just thrown at commodities with no rhyme or reason, no fundamental backing. It just was what it was. And sometimes you get that, but the problem with those types of cash inflows into commodity markets that can't absorb it is all the government money printing, stimulus, all the whatever you want to call it. It causes I don't commodities like corn and soybeans to get to prices that are unsustainable, and it actually creates a lot of havoc for farmers, producers, obviously, and end users. So it's really messy. Unfortunately, I wish the government would probably take a step back and let things move on a more natural cycle. But of course, they don't ask me.
Like Red Lobster.
Well, yeah, I mean, I think it's no surprise that the consumers are starting to get pinched. It's unfortunate. There's basically two separate economies going on. Um, the wealthier side of the economy is very robust and spending healthily, and that's keeping everything moving in a growth pattern, at least on that end of things. And then there's the other side of it, which is much more dire. Obviously household costs are becoming very, very, very expensive. And I think a lot of this is not necessarily my opinion. This is actually a fact. If you look at the data, it looks like a lot of consumers are reaching towards their credit cards and those personal loans and those sorts of things to keep the ball rolling. But at some point, that's going to end. I hate to be a Debbie Downer. I really do. But I've been doing this for a long time. I've been following markets and economies for a long time. And I do see a lot of the exact same patterns in the markets and even in consumer behavior today as I saw in like 2006, 2007. So in my opinion, I think we're kind of on the verge of a recession. I think the government stimulus allowed us to keep this party going much longer than what a natural cycle would have done. But we're coming probably to the eighth or ninth inning of that government stimulus cycle. And when that's punch bowl is removed, then we could have trouble standing on our own two legs. And I think that's what we're coming up against now. I hate to say a broad statement like that without any timing, because even if I'm right, it could be next month, it could be next week, it could be 2 years from now, who knows? But the reality is, I think that all of us should be kind of rating in things, tightening up our wallets, and preparing. We hope for the best, but I think we should be preparing for the worst, and that's for investments, for personal budgets, and also even for the farming community.
I agree with you. What is your sources for bird flu and dairy herd and the beef demand for the central U.S.?
Right. I'm not a fundamental trader or follower. I don't do a lot of fundamental analysis. I definitely keep on top of things, but I'm not crunching numbers by any means. I really just follow the basic news sources. A really, really excellent source of commodity news is Bloomberg, and it's relatively cheap. It's not an expensive product, and you get streaming TV and news on your mobile phone. You can also get it on, cast it to your television. So Bloomberg is a really, really great source. It's pretty basic. They're not giving us all the crazy behind the scenes stuff, but it's good enough for my analysis. And this is kind of off topic, but another source that I really, really like to look at is MRCI. It's More Research Center Incorporated, and they give me seasonal charts. So I can see what commodities normally do at any particular time of the year. Now, seasonals are a guide. They're not guaranteed. Sometimes the market does the exact opposite of what it normally does. But I've learned that it doesn't really pay to go against that. So you should always be aware of what the seasonal patterns are. And one other thing that I look at a lot is the Commodity Futures Trading Commission. They put out a report. It's called the Commitment of Traders, and it tells us who's long and who's short the futures markets. And that's very, very helpful because, like, for example, a couple months ago when everybody was talking about corn in the low fours, maybe going into the threes, we looked at that and we said, fundamentally, we understand the threes are possible in corn. But when we look at the market composition, everybody was already short. All the speculators were short. And you get to a position where if everybody that's bearish has already sold, maybe there's just nobody left to sell. And so sometimes if you can get those kind of tidbit informations out of that report, and they're very, very helpful.
RDF TV with Scott Shalady.
Yeah, Scott is a really, really high quality person. It's an honor to be on his show. We're personal friends, and so it's actually quite fun to be on the show. He is you know what? I should have mentioned that as a source of information because RFD TV puts out a lot of really, really great content for farmers and speculators. So kudos to them. Absolutely.
Finally, finally the bond market and the globe markets?
Well, I mean, a few minutes ago, I just mentioned that things don't feel quite right. I think maybe the economy might not be as good as we think it is. And for that reason, this is not advice. I'm not telling other people what to do, but I'm just letting you know what I'm doing with my own personal savings and investment accounts. Rather than being overweight in stocks, I'm overweight in treasuries because I do believe that the bond market is providing some opportunities. We're seeing the highest yields we've seen in almost 20 years. And in addition to that, it's on a backdrop of stock markets near all-time highs and maybe not justifiably so. Maybe the stock market's overvalued. And so you basically can buy treasuries, get 4 to 5% depending on what side of the curve you're on, and you earn income while you're waiting to see what happens. And if the stock market continues higher without you, that's a risk I'm willing to take. Some people might not be willing to take that risk, but I've learned in this game that patience is the key to success in just about anything, whether you're speculating, investing, trading, your business, your farming. Patience is key because prices are always temporary. And the most important thing is to make sure that you are paying attention to that, not getting complacent, and hedging your price risk where you can, because we don't know what's going to happen tomorrow. Um, you just have to be, again, I'm going to say it one more time, hope for the best, but prepare for the worst.
Thanks, Carly.
Yeah,
I
absolutely. Thank you for
enjoyed
having
our
me.
conversation.
Sure.
We could do this again.
Sure. Thank you.
This is Carly Garner in Las Vegas from DeCarly Trading for the Markets Club podcast. We're back with our last segment.